What are points and interest? Let's talk about points first. So points is another term for percentage, meaning like 1%. So origination fee, which is what a lender is going to charge you to make the deal happen, is going to be a percentage of the loan amount. So if the loan amount's $100,000 and the lender's charging a 1% fee, then the loan origination fee would be $1,000. If the lender's charging 5 points or a 5% origination fee with a loan amount of $100,000, the origination fee would be $5,000. And that's where it kind of got this term points. So this would be 1 point, 2 point, 3 point, 5 points, which is really just 5%, 1% of the total loan amount. So that's going to be points. That's how we as an organization make our money, through origination points, which is basically the idea of putting the whole deal together, making sure that we have the capital, making sure we have the borrower, doing the underwriting, putting everything together, going through the whole process, the loan docs and everything else. That is how we get paid. On interest, which is different than origination points, interest is based upon the time that you have the money out, and that's put on a per day basis. So, for example, you would have, if you're 1.5% per month, or 1.25 if you're over a 680 credit score. So 1.5 per month would be $1,500. 1.5%, 100,000 for the month. If we divide that by 30 days, then your daily rate would be $50 a day. So you'll be responsible for that $50 a day for however long, from the start of the loan to the end of the loan, is what would be responsible. Now, if we're doing that right, you can get most of that put into the loan, so you're not having to come out of pocket with this amount. But $50 a day is basically your interest that you're paying. And that interest goes to the financial investor. So the financial investor is the one that actually brings all the cash to actually make this deal happen. The origination fees go to us for the originating of the loan. The interest is going to go to the financial investor, who's the one that actually puts up the capital in doing that. This origination is going to be a one-time fee for putting it together, whereas the interest expense is going to be on a per diem or a per daily basis based upon a specific rate, based upon the time that the loan is actually out.